All right, hey there. Good morning, everybody. It's just after 11 a.m. Central Standard Time here on Wednesday, the 6th of January, 2021. Gotta keep training myself. I keep wanting to say 2020 still. Anyway, hey, gosh, still another overcast morning here in San Antonio. I've been doing a terrible job of trying to keep up with the weather. Got a lot of other stuff kind of going on right now. But hopefully things are good where y'all are. Geez, oh whiz, I know Germany, Netherlands, the UK. I know you guys are all locked down, and man, good luck with all that. Try to keep your mind healthy. It's hard when you're mandated to stay inside basically. So hopefully y'all are doing all right with that, and hopefully the rest of us don't have to worry about that coming up. But crazy things happening here in the U.S. We've got the Senate runoffs there in Georgia right now. It looks like we might have one Democratic win already. The other one is really close, so we'll see how that plays out. There is an end around way that Trump could still win, believe it or not. But again, I don't expect that to happen. But if it does, you can expect a lot of social unrest, people, upset about it and whatnot, and others excited about it, because it would definitely be a heck of a surprise to happen, which means you can also then expect the markets to get a lot of volatility. And remember, volatility generally happens, at reversal points. So we'll see what happens with all that. Again, I don't expect anything. I don't expect what could happen to happen, but there is an end around way that Trump could still win this. If Congress basically doesn't certify the ballots, the electoral votes, not the ballots, but electoral votes. And it gets basically sent back. There's a couple of steps that have to happen, but it gets sent back to the House to vote on it, to Congress to vote on it, and it's one state, one vote kind of thing. And so, there is a way that Trump could pull it out. It would definitely be interesting. It's exciting times, not in terms of great stuff that could or couldn't happen, but just in terms of all the craziness that's going on. I mean, the political contest here. What a way to end 2021, which was pretty crazy, right? And then everybody's like, oh yeah, or to end 2020. And then everybody's like, oh great, so now we've got rid of 2020, we can go on to 2021, things can only get better, right? Not what if 2020 is the start of what could get worse? There's a lot of possibilities out there. So anyway, we'll kind of talk about a few things here. Who is here? Let's see. Thomas Payne's here. What's going on? Fabian's here. JT. What's up? What's up? Data's here as well. Nevlusian, what's going on, man? Tell you Ryder is here. You're going to send me some sunshine shortly? Easy for me to say, right? Words are hard sometimes. But JT checking in from upstate New York. I guess that means you've got snow, huh? Oh, man. We do not have snow here. Hey there, AC Webb. Good to see you. Andre's here. Let's see here. Telluride says a wrecked economy will bring some social and market volatility regardless, unfortunately. Yeah, exactly. All this stuff kind of works out, together there. Everything kind of moves together. The one thing you guys don't want to do is get hung up on one single chart. I see a lot of people getting hung up on what's going on with Bitcoin, and that's it. They're ignoring everything else, just Bitcoin. Or just stocks, You guys don't want to do that. It's all part of a thing. I told you, guys, if you guys were following back in 2018, I said, in this next push up, once we get past the all-time high there, Bitcoin's going to be a part of the major leagues. It's going to be a part of the greater economic conscience. And that's what we've got. And, but that means it's, when you get these, something I warned about back then was when you get these large players, these large, more institutional type players into Bitcoin becomes then part of their overall portfolio. So as I've mentioned recently, a lot of these larger folks that are coming in, they've done these interviews where they've said, hey, listen, we're in it because we believe that there's a possibility of U.S. Dollar inflation, and we're trying to get into Bitcoin because we believe it may help us protect our wealth against that. But the other side of what that is, what that's not saying, or what it's actually screaming without actually saying it, is if the opposite happens, if the value of the dollar rises, then Bitcoin and everything else is necessarily going to have to drop in price, and we're going to get the heck out. So it's a two-edged sword there, As long as they get in and stay in, you're good. But if they get in with these large swaths of money and then they decide to get out, that's a lot of supply pressure that could come on. And if the market's dumping pretty good, they're not going to get in an OTC deals, which means they'll have to dump on the market, which means you exacerbate the whole downside possibility there. Not saying that's going to happen, guys. I'm just saying these are the possibilities, the things that I see over and over again in social media that people aren't understanding. They're like, oh, it's so great. We got all this money coming in. Well, it's great, but are you not listening to what they're saying? I know Saylor says he's not going to get out. He's going to stay in forever. Maybe he will. I doubt it. If Bitcoin were, I think his average in price now is something between 15 and 20, right? So if it's dropping below 15, if it's dropping below 10, I don't see how he stays in. I mean, that becomes probably, basically irresponsible on his part. I mean, forget him personally, but we're talking about his company, publicly held company. That becomes really irresponsible. You're just allowing your company to continue to go deeper and deeper in debt, or not deeper and deeper in debt, but to lose more and more value, right? But like I said, maybe he sticks it out. But what if it does? What if it goes to 10? What if it goes to 5? What if it goes to 4? What if it goes lower? Do you really think Saylor's going to stay in there and take that huge loss? I mean, if he's got an average in at, say, 15,000, that means by the time it hits 75 or 7,500, his value is now decreased by half. I don't for a second believe he's going to hold on like that. But, we'll see what happens. But it's not just him, but it's, these other new guys that are getting in, they're a lot more vocal about it. Hey, we're in here because we're worried that we might have inflation, and we're trying to protect our wealth. So again, the opposite to that is if they don't get that, if they get deflation instead, if the value of the dollar goes up, then they're going to be losing value by being in Bitcoin, which means they're going to leave Bitcoin, which is a lot of supply pressure. So I think you guys just, again, guys, just because I say this doesn't mean this is what has to happen. But it means that if you're in here and you're saying, you're tooting your horn and, shaking your pom-poms at the fact that this larger money is coming in, but you don't recognize that other side of it, you're just setting yourself up to get caught. You're being, willfully ignorant of the possibility of the other side of that sword. So be careful with that, guys, all right? Let me see here. Let me kind of catch up with you guys here. Who else is here now? Let me see here. What's going on, Hank? Dems have the House, so what way? It's about votes. I'll see if I can share a link with you later, Hank. There's a link online kind of explaining it out there. Tolerable Trader says far-fetched. Not sure what you're talking about, but hey, good to see you here. Adam C., what's going on? Chan Man, thank you, sir. Appreciate you. Esteban, hello there. TV Canal is here. What's going on? Let's see. Mechanic, what's up, man? I haven't seen you say anything in a while. Good to see you here. Cody, what's up, man? Ross Mark is here as well. It's all about money management and stop losses. Guys, I'm going to tell you the same thing today I basically try and say on a daily basis. And that's that you make your money in the market in your risk management. You make your money with your risk management. At the beginning of these streams, there's that where you have the timer on there, the countdown. At the bottom it says rule number 1 is to protect your capital. Rule number 2 is to grow it, right? There's a reason for that. If you can't protect your capital, you're not going to have anything to grow. But most new traders come in and they think about grow, not protecting anything. They think I'm going to jump in and just ride it up. They don't use stop losses. They have no idea of risk management, no clue what they're doing. They're just thinking, hey, I just want to jump in and ride it up. I mean, that you're just playing a casino there. You're spinning the roulette wheel. Give me red, something like that. That's what it amounts to. And if you're doing that, just understand you're going to lose your money, guys. Period. End of sentence. You're going to get lucky every once in a while, and heaven forbid you get lucky at first, because then you'll think that you know what you're doing. And the problem with that is that if when it shows you that you don't, you'll write it off as, oh, I just need to do it again. I need to try again. I just screwed up here or something. And you'll keep doing that, and your money's going to go away. This is what happens, guys. You don't want to be that way. Hey there, WD, the Crypto MD. Martin, what's going on, guys? Can we look at the Dow Jones today? I usually don't. That's usually a Friday thing. We'll see. Maybe I can squeeze in at the end here. We'll see. It is a whipsaw machine for sure. Yeah. Of course, with what's going on with Georgia right now, people are going to, on both sides of the longs and shorts are going to be, jockeying for position based on all that. Mechanic says commercial long the dollar. Yeah, last time they were this long, guys, was 2011, right before it reversed hard. So, yeah, definitely. The Crypto MD says Trump staying in power would be the ultimate market turmoil. It won't happen, though. Yeah, I don't think it'll happen either. But there is a constitutional way he can do that. But, we'll see. We'll see what happens with everything. Hey, Alex from Fox Lake, Illinois. What's going on, man? Good to have you here. You guys snowed in up there? I don't know. I don't know what this snow stuff is. I haven't seen it in a while other than in pictures. Gian, hey there. Good to see you. Telluride says Coinbase was down for a lot of people this AM. I expected more shenanigans. Was it really down? Ooh. It's crazy how much it's down. And with them being a money services business and licensed and everything, I mean, they've got to be careful with stuff like that. They've got a lot more exposure to legal recourse than other exchanges do because of their position and their, with the licensing and whatnot. So they definitely have to be careful with that kind of stuff. Bixafin, Sean, Aramis, what's going on? Good to see y'all. Let me see here. Ross Mark says, I can get 9 trades out of 10 right and yet still lose everything on my 10th trade. That's how important money management is. Being over-leveraged is another factor too. Exactly. Hey guys, listen. Join us at howtotradetowin.com if you haven't yet. And I'm going to tell you what right now. We've got over 40 hours, probably getting close to 50 hours of educational content now for Tier 3. If you are not in Tier 3, you are missing out, guys. I don't know how to say it enough. Not only do we have setups, and I'm going to tell you right now, man, our hot takes, these guys, our members are printing money left and right with them, guys. We've got trade setups from a few months back that are still printing money right now. Significant money. NAKD is up now. What is that? It's up there, 6-7 times, something like that? It's crazy. We got trades are just going out there. But not only do that, but we also have chart requests. And I think the biggest thing, though, one of the biggest things we do for Tier 3 is every Wednesday, so that'd be today, we do an hour-long, usually it's about an hour-long live stream that gives our Tier 3 members another tip, trick, or technique that helps them get into trading quicker without knowing a whole lot about it. They give you definitive areas of entry and exit and stop losses while you're going through the other educational stuff and really learning about markets. So I'm telling you guys, man, right now's the time to do it. You can get in right now and you can get 20% off when you go to join us and then go to your checkout page. There'll be a little black box there that says welcome 2021. That's the code. You can also type it in there as well. But if you click on that, it'll apply it for you. And, even if you get, our monthly, if you get a quarterly or a biannual or an annual package, membership package, we discount how much it is. You're already getting a break on what you would normally pay just month to month, but now you're going to get even 20% more off on that. So significant savings for right now while we've got that out there. If you guys want to do it, I'd suggest you jump on it. You talk to our members, man. They stay with us forever, and there's a reason for that, okay? We are more than a simple, buy and sell signal service. We try to teach you guys how to think, how to act, how to trade like real traders. And I don't think you get that anywhere else, really. Not to level what we do here, guys. So I'm telling you now, jump in there and join us before you can't get that 20% off now. Let's go ahead and jump in here and see where we're at. Let me see here. Data says those Wednesday education live streams are basically meeting David Copperfield backstage drunk sleeping, and you notice his personal book of all my tricks open and you start reading. I love that, man. I love that. It's awesome. So here's what we have, guys. So last night, we had a couple of possibilities here. And so yesterday morning, I let Discord know, the different possibilities and where the invalidation levels were. And so this was one of them, was this potential ending diagonal here. As of last night, I said, look, this is what it looks like we're doing. And so we have this target up here of this R2 pivot right there around 37,394, so 37,500, right around there. Now, there is the possibility, instead of a leading diagonal here, so ABC, or an ending diagonal, so ABC for 1, 2, ABC for, ABC for 3, 4, and then ABC for 5. Rather than that, maybe we have just a normal impulse. If that's the case, then basically what you have here, instead of an ABC here, you would have to have this as 1, and this is an A, this is a B, and this is a C. So then you've got this expanded flat. So that gives you a 2. And then you have 5 up here, gives you your 3. 3 down gives you your 4. And then, of course, you get your 5 there. So either way, whether you want to look at it as that way or that way, the only difference really is, does wave 5 print in 3 or 5 waves? Either case, that target's generally the same. Now, just a bit here before the stream, I let, when I did the update this morning, I let Discord know that it looks like we've got a triangle printing here. So A, B, C, D, E. And so if we do, then based on the height of the triangle here, so you just measure out this triangle from the low to the high there. And then you put it where wave E terminates, which would be this low right over here at around 34,455. And that gives you a target up here of the 50% extension of wave 3 at about 36,656, right about that area right there. So if we get this extension out of here, if it continues up out of here, that's my first target. If it goes beyond that, then I'm looking at the 15-minute R2 pivot up here at around 37.4 to 37.5. Those are my targets. And now the question is this 5 up and done? I don't know yet. Again, there's still a couple of different counts going out there. I'm thinking this is a good possibility of being a 5 up. There's if you look at all the social sentiment and everything else that's going on, it seems like more and more every day I'm getting emails about, price targets of $1 million and all this. And, that's euphoric behavior. That usually happens at market tops. So, it's possible. The thing is, even if this is just a larger wave 3, we still should have a big pullback. And so if we're pulling back on something like that, then I would think that, again, this would be a 3 as in from down here. So you'd be like a 1, 2, 3. So in that, you'd still be looking for price to pull back probably to this daily pivot here, at least around 25,300 or so. Maybe even, back down here around 21,250. That 20 to 25,000 area, depending on where you count your 1, 2 in this. I've shown you guys multiple ways to count this. Right here on this one, this is how I've got the count right now on this particular chart here. Now, whether this turns out to be right or not, we'll find out. But right now, what we'll do is if we get this, that if our target hits and we get the pullback, then we'll play it as if it's a 3 and a 4. And as it goes lower beyond that 4, if it does that, then we'll start looking at the possibility of this being a 5 and this being a larger, more macro type correction going on there. But, again, the trend is still up at the moment. So on the pullback, until it kind of really violates that idea that it's a 4, we'll consider it, we'll look at it as potentially a 4 for targets on that. So, this is kind of where we're at here. Remember, guys, if you're playing pivots, generally, if you push up through the pivot or come in beside, the pivot in the R1 here, and you go up through the R1, if you get rejected at the R1 or R2, this is your R2 to S2 is your play zone in your traditional pivots. If you go above R2, then usually you're going to look at potentially hitting R5 up here. Once you hit that R3, usually that means you're hitting R5. Same way down below. If you drop down below S2 and you hit that you hit that S3, then you're usually looking at S5. You're running the full pivots. This is your zone here, though. And so if you get rejected at the R1 or the R2, usually you're going to target at least the pivot, often at least, if not the pivot, if it continues through that, then the S1 or S2. So even everything else aside, if you're just looking at pivots, a rejection around, by the way, that target we have is right here around that R2 pivot on the daily, which is also on your weekly and your monthly, that R1 pivot area. Same idea. You come in there, reject the R1, you come back down and check the pivot at least. Now that pivot's going to get you, again, pretty close to the all-time high. Makes sense, right? Pop through the all-time high, come back, retest the support, and continue up. But if you lose that pivot, you should be looking at the S1. Now things are significantly different. Now you went from, your all-time high at almost 20,000 down here to around 12,000. So that adds a lot of bearishness to that overall price activity there. So if you want to keep things all clean and simple and wider thoughts, this is how you look at it. We can notice again that we've got this bearish divergence here on the monthly. Large bearish divergence from the all-time high to where we're at right now. Well, the previous all-time high in 2017 to where we are now. Yeah, you have that on the monthly there. Don't really have it on anything else there. Daily, you're not looking at that. I think on the 4-hour, do we have something? Yeah, 4-hour, we've got this strong bit of bearish divergence right here. Bearish divergence, if you don't know, is when you have this swing high here in price and then a higher high. So price is making a higher high, and your oscillator, in this case RSI, is making lower highs. It's showing you that the momentum is opposite of what's going on with price. Momentum's going down. So price generally should be expected to turn around. It doesn't happen right away, though. Especially a longer time frame. It could take a little bit to play out. But you can see that we've had that happening consistently from back here in the 17th. You had it right here. And then it went up there, and then it kind of went up again. And now we're getting it again right here. So, everything else aside, we should be expecting a top probably closer than not, and some kind of pullback, some decent pullback. 1 hour, same idea here. Bearish divergence from back here around the 2nd of January to where we are right now, over the last 3 days. So, that's where we're looking at everything. Again, that target area is right around this R1 pivot on the hourly. Same idea. Reject the R1, come back, retest the pivot, at least, potentially the S1. Now, in this case here, on the hourly, if we get this move up here and then we, hit our target and it reverses off that and it drops below this S1, now all of a sudden we have lower lows. You have a low, a high, a lower low, and then what you're going to look for market structure is a lower high. If it reverses off there and makes another lower low, then your trend is down. So just some bigger picture ways to look at this, guys, instead of getting all hyped up, here on the 15-minute, snorting your sugar, and whatnot there. But that's pretty much where we're at here, guys. Not a whole lot else really to say about it. Let me catch up with you here. Soy from Paris, what's up? Says weekly educational streams are gold. I don't even know who this is. I'm so sorry. I don't know who you are. You've obviously got a different name there in Discord, but I appreciate you saying that. It's what it is, guys. Those weekly educational streams we do for Tier 3, it's meant to get you, whether you have no experience at all, or even if you have experience, it's to show you these different proven ways, these small techniques that you can do to find an entry and a stop loss and an exit. Those are the hardest parts, of being a trader. And they're especially difficult for new traders. So as you're learning about the bigger idea, if you're thinking about the bigger idea of trading and how it's more, sentiment-based, how it's emotional, how it's not logical, and those things. And as you're working through that and trying to understand that, and how to use indicators and everything properly, and how to do Elliott Wave or Wyckoff, these things that we teach. The stuff that you get on those Wednesday streams mean that you can start right then and get into a trade. And you know, without even knowing anything else. And that's what they're meant to do. They're meant to help you guys out there because you know, you guys are going to be trading anyway. I know this. So if I can give you ways to help you trade more effectively, then hopefully you'll at least be able to maintain your money, maybe grow it a little bit as you're learning how to develop a particular system for yourself. That's where the money's made, guys. Your big pros, people like myself and people a lot larger than me, they have their own systems, guys. They don't just blindly follow some system that everybody else follows. So, you know, again, part of it is having to figure out who you are as a trader or investor and moving with that. So that's a lot of what we do there in Discord. Let me see here. Tellurrider says the chart request option is gold too. I've been saving mine up and going to send Chris 50 of them tomorrow. Oh man, we had a flood of them here recently. We had a lot of chart requests we were able to get out. Some of them end up in hot takes that I published early this morning. And others, of course, I'll be finishing them off today, getting them done. So yeah. And if you're tier 3, by the way, the good thing about tier 3 as well is you have all your other tier 3 members who request charts, even if you don't know maybe what chart you want to see. And I publish them there for everybody to see. So y'all have more opportunities to find trades right there as well. Let me see here. Or does it a 10-year run like the stock market? Just kidding. I don't know what you're talking about there. I'm just trying to catch you out with trying to catch up with you here, Hank. Hey there, Martin. Good to see you. It says today is a good day for crypto. My favorite ADA go. Yeah, a lot of everybody feeling very euphoric, very excited. You know, and that's what we want you guys just to be careful about. I'm not saying, you know, guys, I think the one thing that many times a lot of new traders or new people follow me don't understand is that I'm not telling you to short. I never tell you to short, you know, unless there's a good signal to short. But in this overall move up from, you know, March where we found particular levels that we may see reversals at, I've never actually said, listen, you need to short. I've always said, here are the projected possibilities. And so, you know, the one thing that I just want you guys to hopefully come across, especially in Discord, but even here, is that you just need to be aware of what's going on. There is little awareness with new traders in trading. They get very emotionally high on whatever they're doing, and that makes them oblivious to what's potentially going on. Now, some of it is just that, you know, maybe you don't understand macroeconomics or global financial system or what QE really is and what it does. And that's, you know, that's understandable. But a lot of times it's just being blind, just not even paying attention to what's going on there. And so my job is hopefully to help y'all figure out what you need to be paying attention to, you know, and what you should be watching and why, so that you can learn these things so that you don't get caught. Remember, guys, you are liquidity. You are retail traders. Other time frame traders use your positions as liquidity because they know what they're doing consistently. Consistently more times than not. And so, you know, again, my goal is to help y'all become less liquidity. Let other retail traders be liquidity. You guys trade along with the bigger guys, all right? Hank says he couldn't even explain his system to anyone else. There's too much experience in there that you cannot simply convert to a trick or indicator even method. Yeah, exactly. The 10-year run was about there being no need for a big pullback for Bitcoin. Oh, man. That'd be crazy, right? I mean, anything can happen, guys. Here's the one thing that you need to definitely understand. If you don't understand this yet, listen up. There are no guarantees in trading. Zero. Absolutely none. Okay? And I think that's one of the hardest things for new traders to wrap their heads around. Because it's opposite of what you come in looking for. You're looking for guarantees. You want to know that if you put in your money, it's going to go up, right? Or if you short, it's going to go down, right? Absolutely. I don't care how long somebody's been doing it, what their record is, anything. There is no guarantee that price is going to do whatever you think it's going to do. Remember, the market is speculation. And if you look at the definition of speculation, it says that it includes risk. It says there is risk. If there is risk, that means there is no guarantee, guys. Which is why we fall back to what I always talk about, which is protect your capital first. Risk management's where it's at. The only thing you control in the market is how much you lose. You make your money with your risk management. I keep trying to say this over and over again so it gets through to y'all. Because if it does not, you will lose your money. Being a trader, guys, is an exciting thing. It's a great thing because even if you love your job, you don't have to rely on that income to live the life that you want to live. Life is different when you don't have to worry about bills so much, guys. Or maybe you want the freedom of being a trader and staying at home, which after COVID, maybe you've decided you don't because you've been locked down in the house too long as it is. But the reality of it is having this skill is a fantastic thing. But you're never going to really get it unless you understand that how important risk management is. Unless you understand that all your money is made with risk management. Until you get that through, guys, you're just going to continue to feed money to the markets, okay? Hey, Mark says, Texas exit out of the USA, same as Great Britain exits the EU. Oh, man, we joke about it. Us Texans, we joke about it a lot. I don't see it happening. In case y'all don't know, Texas, when it became a part of the U.S., they actually had a provision in that agreement that they would be able to, okay. Every other state has to fly the U.S. flag above their state flags. Texas is the only state that can fly their state flag at the same level as the U.S. flag because Texas was a republic prior to being annexed in, with the U.S. Our capital in Austin is taller than the capital in the U.S. The capital over in Washington, D.C. So Texans, we like to talk about this stuff, we like to kind of joke around about it. But things have changed a bit over the years since we've been included in the U.S. And, it's not as easy to secede. When we first came in, there was definitely a provision in there that made it easy for Texas to secede. But, time goes on, laws change a bit, things change. But, yeah, I don't see us seceding anytime soon. It'd be a heck of an interesting thing, though. Texas has its own power grid. So the rest of the country shares power grids. Texas has its own. So, different things like that. Let me see here. Let me kind of catch up with you guys here. Let me see here. Don't forget, guys, as far as markets go, and the reason, here's my other thought, guys. If you haven't heard me say this before, new traders often are interested in projecting the tops and the bottoms of markets. Okay, and what they mean by tops and bottoms is they mean absolute highest price, absolute lowest price. Professionals know this is a ridiculous thing to try and do, and so we don't do that. Now, here with you guys, I do it to the best that we can, looking at things. But I would never trade on these overall, single digit ideas. Precise digit ideas of where tops and bottoms may be. Your pros, guys, they get in and they ride the market up. They don't necessarily get into the very bottom. They don't necessarily get out at the very top. But they make that money in the middle consistently. And they lock in those profits. There is your secret to trading, guys. Risk management and locking in profits consistently. If you can do those two things, you can be as successful as you want as a trader. If you can't do both of those things, you will never be a successful trader. It's just the way it is. If you don't take profit when you're in profit, when will you take it? Everybody's so scared about missing out on some bigger move. And they end up missing out on the profit they already had because price goes against them. That's most often the case. You guys can sit there. I hope to God you're shaking your head. Yes, I know better. I know it's true. I was a brand new trader back in 95. Whew. What was that, 25, 26 years ago now almost? I still remember. But the thing is, guys, as new traders, you aren't special. And what I mean about that is you make the same mistakes pretty much every other new trader makes. And that's a good thing because if you're doing that, that means that you're not the screw up you may sometimes think to yourself that you are. A lot of negative self-talk happens a lot in trading. And so, but understanding that says, hey, wait a minute, listen, I'm just doing what everybody else does. But that also comes with the responsibility to now change what you're doing. You recognize that you're doing what everybody else does when they first come in. Okay, that's fine. So you can't be overly critical of yourself. But you have to then change what you do. If not, then what was the use of knowing that anyway? All right? Let me see here. Let's see here. And I don't look one day older than back in 95. Isn't it amazing? Man, oh man. Yeah, right. My younger, thinner days. Let's see here. Let me kind of catch up with you guys here. Anyway, okay, so I mean, this is kind of where we're at, guys, and so we're moving up right here. Again, this is kind of this target is what I'm looking at, as well as is where things are headed. If price drops back down below this recent swing low here at 34,455, that may signal that we've got further to go down. So maybe this is an A, a B. An A, a B. Let's say the BC would go up a bit more. But if you drop it down below that level, that would signal that there's probably further downside for wave 4 here. And in that case, we'd look at the 50% retracement down here, which is at at this 15-minute pivot right here around 32,872. I don't think that's going to happen, but if it does, that's where I'd be looking for a bounce off that. Yeah, that's where I'd be looking, especially if it drops below the lowest part of wave 4 here, which is 33,700. Yeah. But, again, from last night, we got the reversal off the high to the general area I was looking for it to get to for the reversal, that 38.2, and we've popped up since then. So, so far, price action playing out like we discussed it last night in the video update in Discord there. Let me see here. Let me see here. Okay, so that's that. DXY this morning making some moves. It popped up here. It hit this this descending resistance. It's being rejected now. I'm still looking at it getting down here toward the toward this 89.084 to 89.116 area to finish off this this fifth wave of the fifth wave here. So again, still looking for this to head on down here. We had TLT, which is again, your 20+ year treasuries, your investment grade banknotes, your treasuries. Right here, we had them drop off a bit this morning. I think with what's going on, knee-jerk reaction with what's going on with Georgia. And the way I would read this is, if you're selling if you're getting out of those investment grade bonds, then you expect there to be easy money. So, money being thrown out there because it becomes risk on. Remember, we talked about this, Monday, about risk on and risk off and whatever. And so that's where it kind of looks like what's going on here now, is there's a belief in that. But, things are far from over at the moment. And, what do we know? I think the markets tend to move on their own. I don't think that really the presidency or whatever has a lot of effect on the overall structure of the large movement of the market. News events, are knee-jerk reactionary local things. But they don't dictate when you have the larger reversals and whatnot going on. So, there are people out there though that suggest that when the incumbent loses to a new challenger in a presidential race, the markets are excited for the first month, so basically through January. But by the end of January, the realities of being a new president coming in and trying to get things done make themselves known, and then the markets kind of drop off. So we'll see. Maybe we get that. Maybe we get a turn close, sooner. Maybe Trump pulls it out and gets that win. Like I said, I don't believe that's going to happen. That would be absolutely crazy if it did, but hey, you know. But what we can look at on the daily here is with this move down that we're getting here, we're about to finally get into oversold here on the RSI. And then Stochastic RSI itself is about to hit that oversold area there. And so that makes a good argument for price to finish and head up. So with my count here, I've got basically a 5 or a 3 coming on here. If this is a 3, then this is a 4. And a 4 could potentially come all the way down here to 133.23. Potentially. But what does that mean in terms of TLT against junk? It means it drops a bit. All right? But remember, the breakout from here is what we're looking for. When that happens, you shouldn't be in risk on assets. So again, we drew this, and I was like, kind of iffy about big lines like that. But really, this is kind of what we're looking at here. We're looking for this breakout. This is your credit spread here. And remember, like I showed you on Monday, if you guys haven't seen that, watch Monday's episode. When this goes up like this here, this is risk off. And as I showed you there, historically, when this goes when risk off, Bitcoin, stock market, they all drop. Because everybody's fearful of insolvencies and stuff like that. Remember, Bitcoin, I keep telling you guys, I know there's all the narrative about 400,000 million, whatever, but at the end of the day, Bitcoin is a risky asset. It is a risk on play. And that is clear as day with this right here, with this chart. If we zoom out here to the weekly, and we pull up Bitcoin on here, look at this. Goes down, goes up. Goes up, goes down. Goes down, goes up. Goes up, goes down. Goes down, goes up. So if we get this breakout and it heads up, Bitcoin's been around for what? Going on 11 years here. That's the way it is. It's a risk on asset. It's clearly shown in this credit spread comparison here. So if this pops up, Bitcoin should go down. I don't care what your narratives are out there. I don't care what your favorite guru online is telling you. This chart shows you right here that it is a risk on asset. Same thing, of course, for stock markets, but we know that, right? We know that stock markets are risk on. So if we look at the Dow Jones, right here, again, same idea. It moves opposite. It's right here. So if we this breakout here, we should have stock market dropping off. Again, everybody's euphoric about the stock market. They say this is a start of a new bull trend. This would have been the shortest correction ever right here, if it is. I don't think it is. I think this was your warning shot. This was your, again, guys, I tell you, I think we're in a grand super cycle here, and we're finishing off now. We thought it was maybe here, but it looks like it's maybe here is wave 5. So this is wave 4. This was your shot in the arm. Hey, pay attention, folks. This is 5 finishing up. And if I'm correct, then this move down is going to be a lot worse than this here, and it's going to last, obviously, a lot longer. If it's a grand super cycle, we're talking 90 years, guys. We're talking the cycle starts back around the Great Depression, ends now. Oh, but the Fed's, different than what it was back then, and blah, 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 yada, 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 yeah. Credit bubble pop-up here. That's what we're looking at. I've spent numerous hours here talking to you guys about it. Credit contraction, not credit expansion right now. Credit contraction is deflationary. You make your money is created when your banks make loans, not when the Fed prints it. The money that the Fed prints goes into the reserve so that the banks have a reserve that they can use on their balance sheet to make the loans. It's a multi-step process. Just because the Fed prints money doesn't mean that all of a sudden everything's going, that all of a sudden your dollars are worth less, because that money isn't out there circulating. It's sitting in the Fed Reserve where they legally nobody can touch it. It's a reserve for the banks, so that they can make loans, which in our in our system, that's where your credit expansion comes from. That's where the new dollars come from. So stop listening to anybody that talks about all this Fed printing means that everything's inflationary and whatnot and all this nonsense, guys. The only thing it inflates because of the bond buybacks right now and the corporate debt stuff is asset prices. That's all it's inflating. Other than that, again, the dollars aren't circulating as they would need to be to get that inflationary impact that everybody talks about, as if they know what they're talking about. If you guys don't understand QE, man, you need to follow people like Santiago Capital. Brent does a great job with the explanations on that. I can't remember his name. Stephen Mader. Follow him. Bond guy. He gets it. He understands as well. You should be following Colorado Travis. Another great guy. I think he's the president of Real Vision now. So these are guys that you should be following and paying attention to if you don't understand. If you think that QE is inflationary, these are guys you need to follow. Other than me, obviously. But they get it. They understand. It's not. Let me see here. So, hey, Gian, if you do what you have to do to get TLT JNK is you have to actually type in TLT/JNK, and then you have, it's the Spider Series Trust Bloomberg Barclays High Yield Bond ETF. And you have to click that to bring it in there, and then you click up here and you hit enter, and it'll bring it up. It's not just going to sit there itself. You've got to compare it yourself. All right? Let me see here. Hank says M2 volatility is impossibly low indeed. Yeah, there is basically no volatility, exactly. And like I showed y'all not too long ago, a few weeks back probably, the credit contraction, corporate credit contraction is just ridiculously dropped off. Contraction is kicked in. Expansion has dropped off considerably here this past year. But it's all the stuff we talked about, guys. Remember, we talked about the U.S. Personal savings hitting record levels back in May, 30 or 35%. And so, but what we see, again, we know that banks are not making loans any easier, which is what the Fed was trying to get them to do with QE. And they're not making it any easier. Instead, they're tightening their requirements to lend. So they're doing the opposite. On top of that, people just don't want to borrow. People are not borrowing. Again, that's what we've shown with the Fed side, with the St. Louis Fed. People are taking out much less in loans, and they're paying off the loans that they have. Both of those things are contractionary in credit. And when you're in a debt-based economy like we are, you have to have expansion of credit. If credit stagnates, that's bad enough. That's hard for the economy. But if credit actually contracts, that's worse. And it's worse because if you're in a debt-based economy, then you're necessarily borrowing credit expansion to build and to become prosperous, right? And so the key to that is you have to be able to pay off your longer-term debt with cheaper dollars or whatever your currency is that you're at. When there's contraction and the value of the dollar deflates, it becomes, or the number of dollars out there, kind of deflates, and it creates this higher price for the dollar, a higher value. That you're going to have to pay debt with more expensive dollars. So the debt you took out becomes more expensive to pay. And you may think, okay, for you, that's maybe not such a big deal. But it kicks in when you look at the other countries that are holding U.S. debt. And so when something like that happens, then you start looking at things like devaluation of their currency against ours. Mader makes a great point of that with, I think he does, with the Chinese yuan and how they're going to have to debase or devalue against the U.S., I'm sorry. And what it causes is you get things like March here, where you have this strong risk. Let me go ahead and take off the Dow Jones here. Let me put on the dollar. There's the DXY. Notice how the DXY pretty much follows the risk here. If risk is risk off, where this is rising, where TLT, the credit spread's rising, TLT, people are moving to investment grade securities, TLT, and getting out of the junk bonds. So this rises. That's when the dollar rises. You see how it moves with it? So again, if we break out here, the dollar should necessarily go up. And what happens there is when you get situations like back here in March, we have this sharp move up. What happens is you get a liquidity crisis. You have those countries vying for dollars because they want to get them as quick as possible. Because the longer it takes to get them, the more you're going to have to pay for them dollars. And you have to pay for your debt in dollars, in US dollars. So again, you're paying for more expensive debt. Or, I'm sorry, your debt you're paying with more expensive dollars. So, it's costing you more. In terms of value and whatnot. So, this is kind of where we're getting to, guys. Current dollar sentiment right now is right about the dollar sentiment right now. The bearishness of it is at levels seen right here in 2011, right here at the bottom. And it's pretty much record levels of lows. So, again, the idea being that we're probably, heading up sooner rather than later. But we need to see it happen, guys. Until it happens, watch for downside, but definitely don't not expect it to happen. For that, let me see here. Yeah, Hank's talking about, if you guys don't know, you can find things like the Fred information, the economic stuff. You can find that here on TV here. So if you go right here to economy, you can look up the different kind of economic M1 money stock, M2 money stock. M1 is just the printed money. Just everything printed money. These are different things here, guys. Be careful when somebody's showing you inflation because this M1 money stock is shooting through the roof. Be careful of that, okay? Effective federal funds rate, all this kind of fun stuff you can find here. There's your velocity of M2 money stock right there. Let me see. Can I open this in a new tab? I can't, can I? All right, let me do this. Let me just get a chart up here real quick. Let's see. Oh, gosh, let me find it here. I'll get it up here for you guys real quick. Almost time for me to go here. Let me see. All right. Now let's go ahead and make a copy here. We'll pull it up for you. And then we'll bring this up here. God dog it. There we go. All right, guys. I've got this here for you. The charts kind of suck here, though, for this. Let's see. I mean, you can see it a little bit. I don't know that you guys can really see this so well, though. Let me see if we can change a little something here, maybe. You know what? I've got a better place to show you this information. You just go directly to the Fed side, guys. This is the St. Louis Fed. And you're going to choose whatever you want in here. You can look up, again, M2 money velocity. Money stock right there. Brings up your chart right here. And look at how that velocity's dropped off since 97 here. It's continued to drop off. So if you wanted, hey, look, maybe there's an issue happening. You got notification about 23, 24 years ago that maybe the bigger picture may be having an issue there. But if you guys want to look at these government numbers, I mean, this is a great place to do it. Here, you can look at so much stuff on there. all the different stuff going on with whatever you're looking at. And it's everything, it's housing. Let me see here. Yeah, so you can get all these different things here. National Home Price Index, housing starts, all these different things here. Median sales price sold in the U.S. These are housing starts here. Notice we had that strong drop-off back there. Right here. January to April. It's kind of moved up here. But it's only moving up here, it looks like, just in 3 waves at the moment. So, does it reverse off here and head down? It does if the market goes, sure. If this right here heads up, yeah, your housing starts are going to drop off. Sure. Let me see here. See here. Yeah, savings. That's what I was talking about earlier, Hank, about savings hitting those record levels back in May here in the U.S. for sure. Let me see here. And yeah, so at the end of the day, again, guys, a lot of people out there, they're talking about inflation. First of all, they don't understand QE or what's going on with all this, the things that I've been discussing with you guys often. But also beyond that is they fail to, they just look at the U.S. in a vacuum. They don't look at the rest of the world. So they don't look at how much is this U.S. inflation, all these printing of dollars in relation to other numbers with the government. And when you start comparing them against those, then when you look at them against other things like, Bank of Japan, the BOJ, you're looking over in the Eurozone, stuff like that, you'll notice that the dollar is actually a lot healthier in those terms than those other economies. I think I showed you guys that the last time. If not, maybe I'll show you again Friday. But there's a lot going on there, guys. When it comes to large macroeconomic concepts like these, like deflation and just QE and stuff like that, please stop listening to armchair economists. There. I'm hearing a lot of people right now talking about their Uber driver or others trying to give them financial advice. That's something we've talked about through the rest of the, earlier in this year as well. Remember, guys, there's that old parable about the shoe sign boy, parable story, truthful story, whatever it is. And remember, the idea is that once people who don't normally do these things start giving you financial advice, these people who their normal day job is flipping burgers or, there's nothing wrong with that, guys. I'm not saying that, but I'm just saying that's where their normal daily job is. Or they're, shining your shoes or driving the cab or whatever. If they all of a sudden start talking about, he has just financial advice that they'd never talked about before, that's your clue that usually a market top is in or is about to be in. But people can, tend to ignore this at their own peril. We've talked about other things that kind of note that market tops are usually in. When your exchanges and things make it easier to purchase. Fractional shares. Those are huge. Everybody's doing it. 0 commissions for trading, yes. These are things that happen at the tops of markets, not at the bottom. So when you think about the stock market, and you notice over the last 2 years, we've got these micro E-minis. We had the E-minis, and then we had the micro E-minis now. Schwab has Schwab slices. I think TD Ameritrade, I just saw something recently about being able to buy fractional shares. These are things that happen at the top. The last time in recent memory that these types of things happened, this general idea of stuff like this, was back at the top of the internet, the dot-com bubble in 2001. And then everything eases back into the way it always was. And then again, as the markets become more frothy and euphoric, then you start getting all these new things like that in there. Robinhood, another the Robinhood app coming out. All of a sudden, everybody thinks they're a genius stock trader, right? Everybody's a genius when the market goes up, guys. Isn't QE asset inflation while stimulus check is normal inflation? Yes, QE is definitely asset inflation. You say stimulus check is normal inflation. It's so small overall. How much money is going to be sent out with those $600? It's negligible effect. It's such a tiny, tiny bit. Yeah, nothing really to worry about there. Let me see here. Hank says we will never agree that the USD is healthier. The world is just more dependent on it for now. Well, like I said, if you use it against other government metrics, and you compare it to those same government metrics against the EU, the Bank of Japan, things like that, you're going to see it is quite healthy comparatively. I'm not saying any of it's healthy. It's all not healthy. It's all, expansionary credit idea, credit bubble type things. But it's just not as bad off when you look at that in relation to those other ones. And so on top of that, of course, like you said, the U.S., same thing I've mentioned multiple times before, the U.S. is the world reserve currency. So, negative effects are not as profound on it as they are in other countries that depend on it, basically. So, yeah. Let me see here. Rossmark, you said you've got taxi drivers asking about crypto in your country now? Yeah, it happens, guys. I posted something here not too long ago on Twitter. I want to warn you guys. I'm gonna get out of here. I want to warn you about this real quick, though, in case you guys haven't been paying attention to these things. Let me see here. Let me pull this up for you guys. Oh, by the way, this is Santiago Capital, guys. This is who you should be following. I told you, if you want, and you don't have to agree. You don't have to agree about deflation or QE, but if you want a better understanding, at least something to make you question what you think you may know, Santiago AU Fund. Like I said, Stephen Metter was another one here. I've got him somewhere here. Let me see here. By the way, if you're not following Mr. Bloom here, guys, you should be following him. He does such a great job. It's a great little storytelling ability to help you understand broader concepts, bigger concepts that a lot of people don't understand because we're not taught that in school, guys. So if you should be following him, man, and just following along and absorbing everything he's writing on, that kind of stuff. This is a good one here, Circle of Competence. Basically helps you understand what the successful people are doing that you're not. Things that they understand that you don't. The ways that they look at things that you don't look at them. And the importance of it and why. So be watching that there. But let me see here. Oh, where is that? Let me find out here real quick. I don't even know. I wrote some up there. God dog it. What did I do? I was just trying to find this one post for you guys here real quick before I get out of here. Nope. I can't find it. Here was something Santiago Fun said. Let me see if I can find them real quick. There we go. Let me see here. This right here. Those of us waiting for a bond and dollar rally. There you go, right? That's kind of life as it is there. But let me see here. Yeah, I'm find Steven here for you guys real quick. Can't ever remember how to spell his last name, though. Is that right? Nope. You guys are just going to have to believe me. It's somewhere on there. God dog, I can't remember how to spell his name. Maybe I spelled Steven wrong. So this is embarrassing. But anyway, I'll see if I can find a link and I'll post it on there. Follow me at TX West Capital, guys, there. And I'll put it on there. Again, You don't have to agree, but, if you're not paying attention to these things, I think you really, really put yourself at a disservice, especially if all you're doing is following bullish posts, the emotional posts that are going on, elsewhere in social media. The last thing I want you guys to do is to get caught. That's the problem. I'm trying to keep you off from getting caught. I'm not trying to disagree with you or make you believe what I have to say. I'm just trying to get you to think, to pay attention. Whatever you do with that information is on you. But the way I look at things has served me well for quite a long time. And so I'm kind of partial to it. Metter, there we go. Metre. There we go. Thank you for putting that there. There he is. This guy. Who is that did that for me? Jordan. Yes. I appreciate you, man. And thank you for reminding me. I knew I was going to screw up his last name. But anyway, another guy that y'all should be following. Just, again, here's the thing, guys. If the ideas that you hold as truth aren't challenged, if you don't allow them to be challenged, how can you be sure they're truth? Okay, this is philosophical question in nature, in the nature of it. But if you just want to believe what you want to believe and ignore everybody else that has a differing opinion, you will never know if what you believe is truthfully real. It may seem like it, but until it stands the test of opposite opinions, of other opinions, you'll never know. So again, my goal here is not to get you to think like me or to believe what I'm saying. It's just to get you to listen to the other side. Things that you may not understand, things you may not know. Or maybe things you do, but listen to it, played out. And just be cognizant of what could possibly happen. That way you've got ideas of, okay, well, if it's going to happen, then I know I need to be out by this area. And you don't get caught holding the bag. That's what it is, guys. All right? So anyway, there we go, guys. I need to get out of here. Jeez, oh whiz. It's already 15 after. You guys will keep me here a bit. Nah, not really. It's great stuff. But yeah, so our targets are where they are. Bitcoin's pushing up as expected. We'll look at a minimum of around 30, what is this? Around 36, 650 or so minimum. If we continue up beyond that, we'll look at 37.4 to 37.5 as your targets on that. Like I said, at that point, I think, right now I would expect that this would be done, this push up. And so whether this is 5 or the large 5, the full one up, or if it's just the large 3, either way, you should get a strong correction afterward once it tops out there. So what would I look for? Once it's up that high, I would look for a move back down below this ascending support. That would be my first clue that, the larger picture that that price is probably topped out. And then, of course, when you're looking at these other time frames here, let me see here, 1 hour, 4 hours, that's where I'm trying to get to. Beyond that, you want to see the drop down below wave 4 here. But, if you're dropping down below this and then wave 4, you're right there. Your next thing is this 1 hour, 4 hour pivot down here around 31,269. These are levels you want to watch to gain confidence that the top is potentially in. You want to look for the movement down through these levels. And then definitely this one right here, this swing low here. This is what I have as a wave 4 at 27,678. So that's where you'd watch to gain confidence that that top is probably in. If you drop down below one and then push back up above it, well then be careful. But that's what we'll be looking at. Oh man. All right, guys. Y'all have a great day. Thanks so much for checking in as always. Please join us. We'd absolutely love to have you over here at howtotradetowin.com. Like I said, well over 40 hours. I think we're probably, if we don't have 50, we're just about there now, of educational content on there. And by the way, this includes that hour-long Tier 3 stream. So if you're Tier 3, you'll get access to the one we're going to do today if you join today. plus all the ones we've done over the last, whatever it's been, 3 months or whatever. They're all archived in there for you. So, and each one of them basically shows a different technique to trade. Some that you can do yourself. Some of them you may like, some of them you may not. You got to just find which ones that you like and which ones work the best for you. But lots of opportunity there that you probably have never even seen. So, try us out for a month. You'll probably stick around. So I would advise you, go for the 6 month or the yearly because our prices do rise, guys. But I have a tendency at certain plateaus of when we're raising prices that I grandfather you in at the lower price, and so you don't ever have to pay those higher prices. But you don't get that unless you're in. So anyway, there you go, guys. Hey, listen, I hope you guys have a great day. Thanks so much for joining in as always. I'll be back on Wednesday, or geez, I guess it'd be Friday now. This is Wednesday, right? Friday at 11 a.m. Central Standard Time. We'll take a look at gold and silver and the stock markets and take some requests for charts and, again, look at Bitcoin as usual and the DXY. All these things we usually look at: oil, natural gas, maybe, stuff like that. Silver. It's a lot of stuff to look at on Friday, so it usually ends a bit longer. But if you want to get all that information ahead of time, join us at howtotradeTowin.com. Be in there first, all right? You guys have a great day. Remember, the only thing you control in the market, anybody know? It's how much you lose, okay? You'll have a great day. Take care. We'll see y'all later.